I thought the Powell Fed and really global central banks were really aiming to get inflation down to what I called 2 point something. And the idea was inflation was up to 5, 6, or 7 at the peak, and the goal would be to get it in the zip code of the inflation target. But in terms of dealing with the last mile, to let the economy sort of get to the last mile on its own without another leg up in rate hikes. And that's what I think we're seeing in the U.S. and really around the world.
Is the Fed restrictive now? The polarity of market economists we speak to is there's a select group saying, you know what, they could go up further and then come down. And there are those others saying, stop it. They're way above the real rate. Bring it down now. Which is it?
They think they're restrictive. I think they're restrictive. I think there can be a debate on how restrictive. The Fed's thinking, which I think makes sense, Tom, is that the longer they keep rates here, and importantly, the longer they signal they're going to keep rates here, they will become more restrictive. And so, yes, I'm certainly in the camp that they've done enough. And the real question is, how long do they have to keep rates at this level?
Rich, Tom and I will speak to people both in academia and in practice that says the Fed should be cutting now. If you look at the real-time data, inflation is maybe not whipped, but we're pretty darn close, and we should be cutting rates now. How do you think about that?
If I were still in the building, I would not be in the camp to be cutting now. It certainly looked like that was feasible coming into the year, but since the beginning of the year, the inflation numbers have been going in the wrong direction, and also I think that especially I think what's relevant here is an element of risk management. So I think there is path dependence. The fact that the last 3 years inflation has been well above target, I think it makes it a harder call to cut preemptively. So I do think, sometimes central banks say they're data dependent and they're not. I do think the Powell Fed now is data dependent, and I think they're ready to cut if the inflation data starts to proceed as they expect.
How do you think this Fed is looking at the labor market? I mean, Tom and I, we kind of throw out this term. It feels like we're at full employment. Everybody who wants a job kind of has a job. Yeah. Wages are going up and at a pretty reasonable pace. How do you think the Fed looks at the labor market today?
I think they see a labor market that is robust by a variety of measures, not just the unemployment rate, but other indications, and that's a good thing indeed. I think one of the first speeches I gave as vice chair, I made the point, the Fed is not targeting wage inflation. It actually likes it when folks get a nice raise, but raises have to be consistent with the inflation target. And we've gotten some good news on productivity in the last year. Productivity growth is now around 2%. And 2% productivity growth with 4% wage increases, if sustained, gets them pretty close to where they want to be. So I don't think there's a lot of adjustment required in the labor market from here.
One of the key issues for a lot of folks is the consumer here. I mean, there's a tale of two cities, if not more, out there with the U.S. consumer. A lot of folks are really struggling, particularly if they don't own assets, whether it's real estate or stocks or bonds and things like that. And how does the Fed think about the consumer here? How do they gauge how the consumer's doing? They look at the earnings from Walmart. I mean, what do they do?
Well, the Fed staff devotes a lot of resources to the consumer, not only at the aggregate level, what is total consumption, but also increasingly during the time I was there, focusing on the distribution, both income and consumption distribution across the population. And there are a lot of things that you can monitor, in particular how many households are late in their car payments or credit card payments. And so certainly the Fed spends a lot of time on the bottom-up analysis of the consumer.
So again, we came into the year, Richard, I mean, the market was discounting 6 rate cuts. Now we're down to less than 2. I mean, the market has no idea what's going on out there. Is the Fed, from your perspective, are they happy to say, hey, we've done a lot of work here. We've raised rates. We had a major impact on this economy. Let's just wait and see how our work plays out. Is that kind of where we are, do you think?
That's exactly where they are. In fact, the chair got that question at the press conference, and I'm paraphrasing, but his answer was along the lines of, we judge that policy is restrictive, and we judge that if we keep it here long enough, it will be sufficiently restrictive. So that's definitely their mindset. They're data dependent in terms of when the cut and how many cuts are going to happen, but they certainly judge that policy is restrictive here, and they just have to keep it here.